Welcome back to Bazaar Morning Call. Before we begin, of course, a lot of stocks to talk about today. But once again, wishing all our viewers happy Ganesh Chaturthi. It is, we kickstart all the celebrations starting with this festival. So hope you have a good one. But our research team is standing by in their festive finery to give us a list of top 10 stocks as we begin the day and the week. So let's begin with Tata Steel. Nigel, you're looking at that?
Well, all through the week, there were reports that indicated that Tata Steel and the UK government can come up with a deal. And, post-market hours on Friday, they in fact went ahead and officially announced that. Now, they've agreed on a deal between both the two parties, and they've announced a 3 million ton EAF steel capacity in the United Kingdom. Just to explain to our viewers, when you make steel by the EAF route, it's lesser pollutant than in comparison to the blast furnace route. And that was the need of the hour, moving towards green steel. And now they've come up with a deal. The total cost of this, transforming from a blast furnace to the electric arc furnace route, well, it entails an investment of close to £1.25 billion. Out of that, Tata Steel will be taking 60% of this cost, while you'll have the UK government that will be taking close to 40% of this cost. What are the benefits? But it transforms the UK unit into a sustainable, capital efficient, as well as profitable business. Remember, in the past few years, it's been profitable only in two fiscals. So this is a big move out there. And it's going to help them reduce their carbon emissions as well. And Tata Steel says post this upgradation, they're expecting 150 to 170 pounds improvement in their spread. So that's going to be the positives out there. Two brokerages I'm going to highlight, ICICI Securities. They're saying the support coming in for this operations is very, very good, because now they won't be dependent that much on the parent, that's Tata Steel. And they're seeing incremental value of around 10 to around 16 rupees, depending on what cost savings you're looking at. So that's why they've increased their multiple, they've increased their target price. Axis Capital, though, they said the deal is not yet done. The employee cost still needs to be figured out. And according to them, it could be nearly around £300 million, which is still a question mark out there. And that's why they maintain their reduced rating with a target price of around 112. The stock opens up in the green, but let's see what it does from there. The street was anticipating this, and that's precisely what's happened. In fact, we'll discuss the deal in a little more detail with Amit Dixit of ICICI Securities in a short while from now. So stay tuned to that.
All right, the other stock that we're tracking this morning is Dabur. Now, Dabur management met with analysts and the takeaways were quite positive, actually, so I'm going with green on that stock. They talk about how they aspire to drive a double-digit revenue growth in the medium term, and they want to also maintain a 20% EBITDA margin for FY25, so they're hopeful to do that. They say that FY24 growth should pick up further because the rural markets have seen a good improvement, and their target is to grow their domestic revenues by 1.5 times the FMCG market growth. Now, there are a couple of businesses that they have their eye focused on in terms of growth. One is the healthcare business. They have a revamped strategy under their new leader, Philippe Hedon. And the revamped strategy is, of doctor advocacy in their healthcare business. And that's how they're going to take it forward. So that's one thing. And the other thing is the home and personal care segment. They're looking at increasing their total addressable market as well via adjacencies. So brokerages are bullish. CLSA, Morgan Stanley and Jefferies, the views should come up on your screen. CLSA has an outperform with a target price of 620, Morgan Stanley with a target price of 600, and Jefferies as a whole with a target price of 565. So I'm going with green on Dabur this morning. But defense stocks are really in focus. Lots of orders coming through, lots of announcements from the government. So Vivek is here to give us the latest on that. Vivek, over to you.
Well, good morning. That's right. So post-market hours on Friday, the Defence Acquisition Council has gone ahead and approved an AON, that is the acceptance of necessity for further, you're talking about both equipment as well as a lot of weapons as far as the entire defense space is concerned. Now, one of the stocks that will be in focus on the back of this development is Hindustan Aeronautics, given the fact that the DAC has approved the AON, number one for Sukhoi 30, MKH aircraft, and also has approved the AON for an avionics upgradation of the Dornier aircraft, both of which that the company is present in. The next stock on our radar is Bharat Electronics. The company has gone ahead and said that they have received orders worth 3,000 crore. Now, out of this, the company has received orders worth over 2,100 crore from Cochin Shipyard. Now, this was for supply of various equipments consisting of sensors as well as weapons equipment. Apart from that, the company has also received orders from various segments totaling close to 886 crore. So far in FY23, BL has received very strong order inflows of over 14,300 crores.
Okay, thanks a lot for that. So BEL, that's of course a stock that has seen a big gain in the last many weeks and months. But the other stock that we're looking at is ONGC, and we're going with red for that because the windfall tax on domestic oil production has been increased to $16.4 a barrel from $11.8 a barrel. So, of course, in principle, this is negative for ONGC, so we're going with red there. But brokerages believe that this may not have too much of a damaging effect. Morgan Stanley has put out a note where they say that the net realizations of ONGC, despite the windfall taxes, the profitability of Indian refiners remains above the mid-cycle levels. So the net oil realizations have been consistently moving up post-COVID. The net realizations for ONGC are now near $80 a barrel, and profit per barrel lies beyond $21 a barrel. So despite the higher windfall taxes, the net realizations have been moving higher, and hence for Morgan Stanley, ONGC remains their most favored play. They say there's also, apart from realizations improving, there's monetization of the $100 billion investment over the last decade. Policy reforms are in favor of this company, and that all of that could support higher E&P returns. And hence, we're going with red for just the very near term because the tax on crude has been hiked. But in the longer term, brokerages are bullish.
Okay, all right, Sonia, thanks a lot for that. Well, let's wind this down. Surbhi joins us to fill us in with some more stocks that are in the news. Morning, Surbhi.
Morning, Nigel. So first one on my radar is NCC. Now, the arbitral tribunal has pronounced an award on 14th of September on the NCC versus Sepcom energy dispute, where they say that the Sepcom has to pay 198 crores to NCC towards its net claim of 606 crores. Now, the company says they're going to examine the award and impact on the financial statements, and they will take appropriate steps that may be advised. But for now, it's a negative for NCC. Texmaco Rail, the board has approved a fundraising of up to 1,000 crores via QIP and additionally a 50 crores by way of preference issues to the promoters. Brigade Enterprises, the company's subsidiary, acquires 5 acres of land parcel in Bangalore for 124 crores. Now, the company will be developing a residential project in that land parcel, which will have a revenue potential of over 800 crores. And lastly, Dhanlaxmi Bank, an independent director, has resigned from the board and citing various issues, including a rights issue, capital enhancement issues, whistleblower issues by the directors, and an unethical code of conduct of the bank's business.
Okay, Surbhi, thanks a lot for that. So plenty of stocks to focus on, but Vivek is also here with us to give us a list of the block deals that he's tracking this morning. Vivek, over to you.
Well, that's right. The first stock that saw a very large block deal on Friday was restaurant brand Leisha. And just like we highlighted on Friday, Everstone Capital was the seller. They've sold 25.5% stake in the company out of the total 40.8% stake that they held at the end of the June quarter. But the list of buyers, is very strong. Plutus Wealth Management, ICICI Prudential, both of them picked up over 6% stake in the company. Quant Mutual Fund and Tata Mutual Fund picked up over 2% stake in the company. Amal Parekh, Franklin Templeton, Goldman Sachs funds, all of them picked up over 1% stake in the company. And the other stock on the radar, one we don't discuss too often, is Panacea Biotech. Serum Institute of India, has sold 4 lakh shares, that is almost 0.65% out of the total 6.97% stake that they held at the end of the June quarter. So that's another stock to keep on the radar on the back of selling by Serum.
All right, thanks a lot for that. So long list of stocks. Here's a quick recap. Stocks with positive news flow. There's Tata Steel, Dabur, defense stocks, Texmaco Rail, Brigade Enterprises and Restaurants Brand Asia. While stocks with negative news flow, there's ONGC, Panacea Biotech, NCC and Dhanlaxmi Bank.